Hello, everyone. Welcome to the Nasdaq Dorsey Wright podcast for the week ending on the 27th. Is that 26th?
Yeah, 26.
26th. Today's the
Friday.
24th. So
Yep.
we're recording this on Wednesday morning, 24th. Yeah, Friday, the 26th, end of the week. And then hard to believe we're almost at the end of September.
I know it's crazy. It's flown by. We have our big catapult event coming up too, which feels like it's right there now, where it didn't feel, we're getting presentations ready and everything.
Yeah,
Whereas, a month ago, it felt like it was still pretty far
it's
away.
right around the corner. Yeah, I guess sorry for blown flying through the beginning of this podcast too. Didn't even give introductions. I'm Ian. This is Joseph. Been a while since we were sitting here across from each other, at least on the pod.
Been a
But
few months, I think.
yeah, there's a lot of stuff going on. Have the Catapult conference coming up. We do still have some openings for that. There's a few tickets
Hmm.
left. We're getting close to capacity though,
Yeah. Yeah, we
which
have
is
what
cool.
I think over 100 people have already come in, so
Yeah,
it's filling up pretty quick.
yeah,
So we got
should
a
be good.
couple spots
It's
left,
going to be
but
in Nashville, October 15th to 17th. If you are interested in it, just check out the platform. There is some information there about how to register.
yeah.
But there's when we're updating slides, when we're updating stuff, there's been some decent movement going throughout the market over the
Hmm.
past couple weeks. It's maybe surprising to some. We saw a rate cut last week. I think we talked about that on last week's podcast.
Yeah.
Um, Same time of year as we saw the 50 basis point cut last year,
Yeah.
which is kind of funny to think about. I think you were at Future Proof,
Yeah.
right? Kind of the week after that. I was at Future Proof the year before conference, right when
Same
that hit. Yeah,
time.
same time. Which is just kind of funny. We've seen markets, whereas back then, certainly, I don't think many people were expecting the 50 bips cut. This time, the 25 bips was everyone pretty much
It was
expected
priced. It
that.
was pretty fully priced in
So
a
you,
couple weeks in advance. It wasn't
right,
like, oh, like 2 days into it, or like, oh, people are really shifting around. Like, it was pretty much expected for a
right.
while.
And now that we're a week out, we've seen some action in the wake of that,
Yeah.
and we'll get into a little bit of that, but not as much action as the Fed cut rates. I mean, it was the kind of thing that I had people talking to me about, like, oh, is the Fed going to cut rates? This is going to affect mortgage rates and affect this.
Yeah.
And I was talking with some people that in actuality, mortgage rates went up a little bit
Yeah.
because they didn't cut 50 bits, they only cut 25.
Yeah. And I think part of it is too is, when you get to an event like that, it's almost like, you buy the news, sell the, or you buy the rumor, sell the news type of deal. And
Yeah,
that's
yeah,
essentially what happened with bonds.
yeah,
So we'll see. I mean, the economic projection stuff was probably more important, and that was somewhat in line with expectations as well. That would have moved the market, I think, a little bit more if that came in as unexpected, but it was pretty much, things were as expected going into it. And small caps, we saw rallied at new all-time highs after that.
yeah. That was probably one of the biggest moves that we
Yeah.
saw. I mean, we've seen all-time highs from major domestic equity cap weighted large cap benchmarks, but small caps had been a while since they'd made a new high. And we saw the Russell 2000
Yep.
IWM break out finally to a new all-time high.
Hmm.
It had been 966 days, I think it's trading days,
Yeah.
right? Since we'd gotten a new all-time high. The last all-time high was what, back in 2020,
Yeah.
which
November
so
2020, which, if you remember, that was when the vaccine news announcement came out.
yeah,
And I remember being at the gym that morning and small caps were up like 6% before the open.
yeah, yeah,
So
yeah,
I remember that. That was
pretty
pretty
wild
crazy.
times then, that's for sure. And not when we're seeing this far between all-time highs, intuition would naturally lead one to believe that maybe the rally's over. And I think when we look back at the picture, the default chart of IWM over the
Hmm.
past few years, we won't throw that chart up, but just so people can know, it's really just kind of bounced back and forth.
Yeah.
We've seen every time it gets up close to a new all-time high, it turned right back around and kind of fell back down to the same level and just kind of moved very wide range, but in a range throughout the last several years. Finally, we break out of that level, and we did some work, I think earlier this week. Trevor on our research team looked at, okay, how does the Russell 2000 do after it takes a year or more to get to a new all-time high? This is the 12th instance that we've seen it take at least a year to
Mhm.
get to a new all-time high. And I was kind of surprised in looking at some of these numbers, Joseph. It's not it actually been pretty good forward returns.
Yeah, I mean, on the average and median front, I mean, it's very strong. 1 year, 13.5% roughly. 2 year return is closer to 2018. It's at 18.68%. So not every occurrence is positive, but on average, on the whole, it's pretty good, right?
Yeah, and I think especially in that 1 month to 1 year time frame, you see notable excess return over like the baseline average
Yeah.
for the Russell 2000 are, especially over the 3 month time frame. You're almost tripling the average 3 month return of the
Hmm.
Russell 2000 3 months after it makes a new all-time high,
Yeah.
which is not something that I would have guessed
Yeah.
would have been the case. I mean, we do see small caps. A lot of those major small caps representatives might be in a little bit extended territory, and a lot of them do not have very good long-term technical pictures because
Mhm.
they've been lagging for so long.
Yeah.
I know momentum's been really tough on the small cap side of things. It's
Hmm.
been an area of momentum that's really lagged because small caps have been the laggards.
Yeah.
And so I think that's going to be an interesting area to continue to monitor when we see momentum start to get going in small caps. It's at least had a tendency historically to move pretty quick.
Yeah.
So that could be a pretty interesting place to monitor as we move into October and the rest of the year.
For sure. For sure. And financials make up a big part of small caps as well,
Right.
particularly
A lot of
regional
those
banks.
banks. Yeah.
So a lot, you know, the rate cuts, small caps reacting a bit better to lower interest rates does make a lot more sense there if you look at it from there's a lot of regional bank exposure in the small cap space and it helps them from a financing standpoint.
Right. Right.
Um, so that's something to think about as well.
Yeah. But it's not just small caps that have been doing well. I think you were talking a little bit about the opposite end of the spectrum, the biggest names. The S&P 100 has also seen a little bit of a run recently.
Yeah, so we talk about how small caps have done pretty well in an absolute perspective, but really all of our rankings say, large cap growth is the place to be.
Continue to say that.
No,
Yeah.
yeah, no change there. And one thing I like to look about from time to time is kind of long-term excess returns versus some type of benchmark or just kind of similar to like what ROS comparisons are, but just from a performance standpoint. So I looked at OEX, so you get like kind of your mega caps in there. It's still cap weighted versus the S&P equal weight. OEX has outperformed the S&P equal weight by more than 50% on a rolling 3 year basis. This is the first time it's happened since 1999. Now, don't worry because you still had another year and a half until the cap weighted stuff put in a top. It took until March of 2000 really for that to happen. Obviously, you get a really bad period after that. We're not calling for that. We're looking at, that's one example in our data set that we can look back to. It's not um, a hefty sample that we can look at. But when people are talked about, and yeah, I'm worried about the concentration at the top of the index, how much the S&P 500 is relying on those stocks. It can get crazier from here for sure.
Hmm.
And I know that's a conversation a lot of advisors are having with clients as well right now. So and that's one of the nice things about trend following and momentum and relative strength is, when this does actually start to flip, we can be prepared for it and have a game plan where, a lot of people are like, well, they don't really have a game plan other than owning the cap weight or some version of it
Yeah.
in a lot of people's portfolios at this point,
Yeah,
because it's
absolutely.
been the case for the last 10, 15 years.
Yeah, and that's something that John talks about a lot. We were at a conference, a little RS Institute that we were putting on last week out in California. And John got the question of, hey, how everything is so concentrated in this AI trade, right? It's everything in technology is doing well because of AI. Utilities are doing well because of AI. Financials are in some ways doing well because they're thinking IPOs are going to get better because of AI. Everything's so concentrated in this industrials, infrastructure, all of it, right?
Yeah.
How long can that continue, or what's going to happen if that changes? And John's point, not to steal words from his mouth, but the summary of his kind of point was we're going to ride this trend as long as it's there. That's the beauty of momentum is as
Hmm.
long as you're seeing names like the OEX outperform names like the equal weight, we're going to ride that until it changes, right? And luckily, momentum, as you said, it's rules based. It's not like you and I are sitting there in a room and saying, "All right, we think it's going to change on this day."
Yeah.
It's we're waiting for the price movement to dictate those changes, and we just jump into the new trend when it shifts. Are we going to catch the absolute top? Are we going to catch the absolute bottom? Most likely no.
Yeah.
Very rare instances where that happens. You need to wait for some signs of movement to indicate, hey, this is a new trend, not
Hmm.
just we think it's going to be a new trend.
Yeah.
So you might get a little underperformance at the turn, but then you expect for that outperformance over the prevailing months, years, however long it is, picks up for that little bit of underperformance.
Yeah, and I think people are really, people are concerned about it too, right? Because for most people's clients, they're not they're not super aggressive, right? Especially as they get older in age. So like diversification really matters at that point.
Yeah,
At the same time, you're pressured to keep up with the market as well. So it's an issue for asset allocators to kind of deal with this paradigm that we're in. And yeah, it can definitely continue further, but I think as long as you have these talking points with clients, that kind of prepares you for those conversations and say, hey, what are our end financial goals at the end of the day? We're analysts, so we're always talking about the actual market stuff. But
right.
like from a financial planning standpoint, you know, having this conversation with clients about, hey, it's the cap weight's doing really, really well. Things are really concentrated. Yeah, it can go on for another year, 2 years. Here's our game plan for it, and here's what we can do if that isn't the case
Yeah,
anymore
that's a
as
great point.
well.
The game plan is the
Yeah,
important thing. Like
yeah,
having a plan for what's going to happen, and having it before it happens. I
yeah,
think it's you don't want to be making a game plan in the middle of the storm,
yeah,
right?
yeah.
But when we're looking at other stuff in terms of maybe some of the names that have been leading the S&P 100,
Hmm.
obviously the biggest name in the S&P 100, biggest stock period, Nvidia. Be hard to talk about large caps without talking about Nvidia.
Yeah.
Seen some interesting movement over the past week. We've seen some interesting movement broadly across a lot of the tech space, with just more capex, more AI spending
Hmm.
out there. It's NVIDIA's partnered with OpenAI and investing in OpenAI. Microsoft invested in OpenAI, and OpenAI is partnering with Intel and Broadcom, and then all of a sudden Oracle is up there. It's just a big hodgepodge of everyone paying each other money. It seems
Yeah.
like from a broader perspective, but you can kind of use some of the charts to kind of like cut through the noise a little bit. Obviously, you can't invest in OpenAI, at least not in public markets.
Yeah.
There's private funds out there, and we won't get into all
Yeah.
that
Good
yet.
luck getting your foot in the door
Yeah,
there.
but we'll focus on the public market side of things, and just with all these different companies that are investing in one another. I mean, Nvidia's talked about a lot because everyone wants their chips.
Yeah.
Everyone wants to partner with Nvidia, right? Um, to maybe make buying their chips easier.
Yeah.
But when we're looking at some of the movement for that, we saw an announcement earlier this week that Nvidia is investing in OpenAI, and that led to, even though they're the ones spending the capex, it led to a new buy signal on that default chart for NVIDIA. Breakout there at 182 ends a streak of two consecutive sell signals there that we saw in August and earlier this month in September. Breaks out, but then meets resistance at 184
Hmm.
from those all-time highs that had been met on two previous occasions in August. Turned right back around and headed lower with the market action on Tuesday of this week.
Okay.
So buy signal Monday, reversal lower Tuesday. Um, Seems like it is just kind of consolidating, moving sideways.
Yeah. I mean, it's just a lot of sideways action right now. It's building up for another move, whether that's higher or lower. I can't say for sure. It's 4 for 5 from a tech attribute standpoint. So things still look pretty strong here. Now, obviously, Nvidia is a pretty volatile name, so things can change rather quickly. Look at support here, 166, 170. And if you start trading below 166, there's really not a lot of support below to lean on, which is kind of the unfortunate thing. Um,
Yeah, you're going to be looking around the 150, 152 from those prior all-time highs.
yeah,
Um,
that'd be the next big area,
right,
right?
right.
And then yeah, below 152, it almost looks like a failed breakout type of deal. Kind of a long-term failed breakout because it's been above here for a few months. But that would, be a big line in the sand as well to keep an eye on. But, from our standpoint, it's a 4 for 5, so it's hard to say anything too negative, and it's trading 4 boxes away from an all-time high. And while it has consolidated and kind of traded sideways, that isn't a sign yet that this thing's going to start just tanking lower.
Yeah, and I mean, it could just be a little bit of reversion lower too. I mean, Nvidia's been on such a run, and we saw this going back to the spring of last year.
Hmm.
We saw a real continued spike and massive explosion higher. I mean, one of the just continued massive column X's after massive column X's, some consolidation in March, a couple of consecutive sell signals in April, and then things started to kind of consolidate and it exploded higher again from there.
Hmm.
So I think it'll kind of Obviously, we don't know which direction it's going to head in. Consolidation is not a bad thing, though. We're seeing Nvidia is now right above the midpoint on a trading band. It's not an overbought territory. It's been on a run, but not as big of a run recently. So it's not as just like heavily extended as we've seen over the past few years.
Yeah, it's trading right at the middle of the trading band
It's
right
up
now, pretty much.
32% year to date,
Yeah.
which is a lot more in the market, but not a lot more than a lot of other tech areas. And I think the interesting point you hit on that Nvidia is a 4 for 5er. It dropped from a 5 to a 4 last week on the 18th. The that attribute change was it reversing down into a column of O's against its peer group. So it reversed down into O's against semiconductors.
Well,
Well, but it's the biggest stock, right?
mm.
Still in the top quartile of this that semiconductor sector matrix. But the reversal down into O's, I think, could be indicative of maybe a little bit of a broadening out play. Like there's some other areas that are looking pretty good across the broader semi space.
Oh, for sure, for sure. And I think you mentioned Intel, which is a 5 for 5 right now. You know, talk about Nvidia was up 36%, Intel's up 46%.
Yeah.
Um, yeah, actually a really good looking chart in my opinion. You know, you had a really rough 2024, ton of sideways action, and it's just kind of started to really break out of the consolidation it had between what 18 and 26 on this chart.
Hmm.
And that consolidation took about a year. So there's a
Right.
lot of energy built up in that range. We saw a breakout. It's pulled back kind of closer to the top of that range. So I think that's a pretty good entry point
Yeah,
as
and people
well.
have been wondering. I mean, Intel was so big historically, it's really just kind of lagged the
Hmm.
rest of this growth in the technology and the semiconductor space. I mean, when we're looking at Intel, Intel focuses on CPUs. Obviously, NVIDIA focuses on GPUs. Part of NVIDIA invested in Intel through a common stock investment a couple weeks ago,
Hmm.
and that investment was to spur building out of the AI infrastructure using CPUs. So I think that was a kind of sign to say, hey, even though that in a way helps cement NVIDIA's stance as the leader in the GPU space, there's still going to be we don't only need GPUs.
Yeah,
We need
you're gonna need
CPUs for the
CPUs.
infrastructure too,
Yeah.
right? And so I think that maybe led people to realize that Intel could have some legs to it. Like you said, two consecutive buy signals, breaking out there to 32, pulling back. It is extended, but not too heavily extended. So 5 for 5er moved to a buy signal against the market last week, the same day Nvidia dropped against its peers.
Yeah.
Um, Now it's not as highly ranked as Nvidia in that sector matrix because it hasn't been on the run. We haven't seen that long-term relative strength really take hold like it has for some of the other areas.
Yeah.
But you just cover up the name and look at the chart. It's pretty good.
It's I mean, it looks really good. I'm trying to look at, um, let's look at SOXX. You know, Intel's a 4% weighting in SOXX and SMH. It's a little under 4% weighting. So relatively speaking, it's not as large as some of the other big players in the space. So it is an opportunity to find a really strong name that's breaking out of a big basing pattern that could offer some outperformance versus the benchmarks for that area.
Yeah, for sure. Another area that's breaking out of the pattern is if we flip the conversation a little bit, talking from domestic technology to international technology.
Hmm.
I mean, the big story over the past couple days or a week or so has been China. We've seen a lot of improvement in Chinese equities has kind of come with a lot of improvement from a lot of the Chinese AI recently. We saw
Hmm.
like Alibaba is released a new AI module over the past couple days. I think that stock's up 9% today. But if you look at a fund like the CraneShares CSI China Internet ETF, KWEB, KWEB, real strong looking technical picture on the default chart, 4 consecutive buy signals, breaking out to new multi-year highs, a little bit of a pullback there. But we were taking a look at the other chart. I think the 1 point chart, is that right?
Yeah, yeah, 1 point chart. Another kind of similar situation to Intel in terms of, forming a long-term base, actually even longer term here. You got a few years since it kind of finally put in a bottom in 2022, and then just a lot of chop, kind of slowly moving higher in that
Mhm.
chop over the last few
The
years. But
lows were not breaking down to the previous lows,
yeah,
which is important
yeah, we were making like higher lows,
relative, I guess. Yeah.
relative, yeah. Not really higher highs consistently, but we have started to see higher highs over the last few months, which is a
Yeah.
which is a great sign. And you were talking about it's still got quite a while before it could get back up to its 2021 high.
Yeah, it's kind of crazy. That 2021 high up at $97. We're currently at 42. I
Yeah,
mean, it's still not even halfway there.
yeah.
So if and we've seen China historically over the years, when it gets going on a run and has a tendency to move pretty quickly. The
Hmm.
problem is that we saw such massive underperformance from this thing from that peak in February of 2021. I mean, you talk about a clearly defined negative trend, just moving 45-degree angles down. Like it was just completely
Yeah,
clearly negative consolidation, and now it's seemingly got some legs to this breakout to the upside.
yeah. I mean,
That doesn't mean it's going to be straight up from here.
it's choppy. It's
Yeah,
not for it's got an R risk of over 3. So you're
which
expecting
is a
about
lot for an ETF.
yeah, you're expecting about 3 times the volatility of the S&P in this thing. So not something that you necessarily have to have a huge allocation towards, but if you do want to get some international exposure to an area that really, the first part of this year was all about developed markets and they still look really good, but
Yeah.
emerging markets have really picked up in the second half of the
Oh
year.
yeah.
So this could be some type of option to add maybe a small sliver and get some exposure to some pretty volatile but looking really strong uh, Chinese tech names.
Yeah, EEM is now outpacing EFA on a year-to-date basis by about 4%.
Yeah,
And that's because of China. I
yeah.
mean, that's other areas have been looking pretty good, like Greece looks pretty good.
Hmm.
Certainly some other areas within the emerging market space. But China has, I mean, KY 5.95 near perfect fund score.
Yeah, it doesn't
It's
get
hard,
really
it's hard
better
to say
than
much
that.
negative about that. Yeah.
Yeah.
Yeah, I mean, it definitely, yeah, I think you put it well. Could be an area to consider for those looking to add exposure, more focused exposure to the space. Also, it's a little bit of yield, 2.74%
I
yield.
was looking at that too. I was kind of
Yeah, me
surprised.
too. Yeah, definitely don't see that on the domestic tech side.
No, you did not. No,
Cool. Taz, you got any other charts you wanted to kind of run through?
I'm good.
Uh,
I think we covered
I
everything.
think we've gone through enough for this week. So thanks, Taz, for hopping on. Thanks, everyone, for tuning in this week. As a recap, if you need any information on the catapult or anything else, just check out the website, shoot us an email, give us a call. More than happy to help out, and we'll talk to you again next week.